I find Apple to be one of those stocks that acts very well technically. And I think the reason it does is because it's obviously a very large company. It's held in a lot of portfolios. Everyone watches the stock every day, every week, every month. And it's also not too volatile, right? It's not one of those like new tech stocks or something that people have to chase because it's a new idea. Like it's been around for a while. In fact, the company's been around since the 80s. But of course, it's only been the past, sort of 30 years where the stock has become a new sort of phenomena since the introduction of the initial iMac. Actually, no, the iMac. I think before that was even the iPod. Anyway, I digress. Let's look at the chart. I want to show you something because I think Apple's broken out here, and I think it's prone to retrace. And that's again the very clear pattern we continue to see in the stock, and it's actually very healthy. So let's take a look at this chart, and what I'd like to point you to is just a couple of points in time over the past few years where the stock has done this pattern. I think it's about to do it again. So here is the chart, and what you're looking at here is a time period from the year 2022, or let's say late 21 December, into June of 23. So that's obviously quite a while of consolidation. But ultimately, or finally, the stock starts to break out right there. Now, before it ultimately then continues higher, though, it actually first retraced right back and to this line. And in fact, it's not an exact science. I know this is something that people always wish for, that it's exact, and it goes right back to that line, and it bounces right back, and that can happen, but it certainly must not happen. So the point is it retraces, it breaks out, pulls back. It's two steps forwards, one step back. And that's the way the stock continues to act. So that's one example there. Let's move on to another example. This one is even more recent. This is a consolidation period that took place from late 23, so about a year ago, to mid part of 24, so June of 2024. And then, of course, what happens is the stock starts breaking out, and it starts breaking out meaningfully. But again, before it starts going higher again, what does it do? It again comes right, in this case, literally right back to that line. As we talked about a second ago, it doesn't have to be like that exact. In this case, it really was exact. It can happen, but it certainly must not happen. And I think it's about to do this again here. So you can see it once again, the stock is now broken out. So let's just take these lines. It's broken out. The question is, at what level does it start checking back? And that, of course, is sort of the $1 million question. What we like to do here is we like to look at the broader market for guidance. I typically like to see a breakout like this be very forceful. This one here was a little bit more gingerly. It's happening late in the year, of course. But if you look at that breakout there, if you measure the whole move, it was about 18%. The breakout here so far was about 7 or 8%. So obviously that's a lot less. That's less than half of that move. The point is the more the move goes, so typically after 5 to 10%, I start to get to the point on a stock like this where I'm no longer willing to take that risk as much, right? Smaller positions. So can the stock go a little bit higher and then pull back? It certainly can, but it's already at a point where I think doubling down on bullish trades here, the reward is no longer as good as it was, obviously, as it started breaking out in early December. So that's a little bit of perspective. Again, I think Apple's a fantastic stock to I like the long-term prospects of an investor, of course. But if you want to be more tactical with it, if that's your thing, it does act very well technically. And again, for the aforementioned reasons. Hope it helps. See you again soon.